Hello and welcome to my channel. Today I would be doing a stock review on Euronet, ticker symbol EEFT. This company is very interesting to me. It's a unknown company I'd never heard of before. I was just looking around the stock market trying to find some value, and I ran into this one. It might be a great contender for what we would want in our portfolio as investors. Who are they? Euronet is a leader in electronic payment and transaction processing solutions for financial institutions, retailers, service providers, and individual customers. They also offer ATMs. So yeah, they're basically a diversified fintech company. I mean, they're like a mini American Express, Visa, MasterCard, companies like that, but they offer physical locations as well as their digital solutions. They operate mostly in North America and South America, but they've been branching out to Europe. Most notably, they were trying to do business with Greece, who, if you don't know, had one of the most recent big financial collapses of an economy in like the 21st century. So just keep that in mind as we go forward. The market cap, 4.78 billion, the price 103.54. The PE ratio is 19.25, so kind of pricey but not too bad. The average price target for analysts is 113.8. Total cash 1.6 billion, total debt 1.86 billion. So they have cash. They're not broke. They're not broke at all. They have more than enough cash to sustain their operations. The growth of the company, almost perfectly stable. Consistency is a very important metric when looking at a company. You don't want to see a company that's up and down and up and down and up and down. I mean, this is almost as consistent as a company can possibly get. Euronet. I mean, the chart is growing year after year after year, basically, with the exception of that little bump you see in there that came from COVID. I mean, a lot of companies were affected by COVID. Some of them did not survive, and some of them are still struggling. But this company, apparently, looking at the chart, you can see that they're still growing their revenue over time. And that's very important for you when investing in a company. You want a company that has growing revenue. You don't want a stale company in your portfolio. You want a grower that's going to show you that your money is well invested. You don't have anything to worry about. All you need to do is sit back and let time take care of everything. You know, make sure you keep doing your due diligence and keeping an eye on your investments, but don't overdo it. Putting it into risky stocks. EBITDA. You know, with the exception of COVID, they did pretty well, like I said. I mean, they're still recovering, of course. But with the exception of COVID, they were doing practically fine. And COVID is like a once in a century type of thing. Maybe even once in every 500 years. Like, we hadn't seen like a plague like that for like a very long time. Maybe since like the early 1900s. So COVID was definitely out of the ordinary. The earnings per share, not as good as we would want to see. But like I said, it's been growing over time. Then to get knocked down by COVID. But it's coming back to its pre-pandemic levels, earnings per share. And that's what you want. You're seeing the company fighting back. The company is fighting to get back to where it was before COVID. And management is the main drivers of things like that. A lot of companies can't recover from COVID because their management is just terrible. Their management cannot rein in costs and expenses. They don't know how to balance balance the books and get everyone motivated. Shares outstanding hasn't been growing, which is good. I like to see that. It's at the lowest levels ever, actually. in the history of the company, as you can see from the chart. That's what you like to see. You like to see a company that's not diluting you every time you turn around. They're offering new shares and sales to keep the company afloat, which is something this company doesn't seem to need to do, or sneaking it in by offering the people that work there stock-based compensation. So a lot of companies would prefer to dilute their shareholders by offering their staff stock-based compensation, and at the end of the day, it's the shareholder that's suffering, because most of those executives are going to get those stock, and whether the company is on an upward or downward trajectory or hurting or doing good, a lot of them are going to sell. Shareholder equity, you like to see a company that's offering you, value by investing in their company. They're helping you make money and you're helping them make money by being a shareholder. A company like this that's not growing shareholder equity is a minus, but at least they're not going down all the way, like your whole shareholder equity is not collapsing. But it's definitely a very important metric for me when looking at a stock. I want to see that the company has excellent shareholder equity, because I want to make money in a stock that I'm investing in. And if a company has a history of helping me make money, then I'm here to help them make money too by being a shareholder in the company. A lot of people don't look at this metric, but I love it. The margins. As you can see, the margins were pretty much bulletproof till COVID came, and like that bump, you can see it's still recovering. But recovering they are. Some companies take longer than others to recover, and this one is going to be one of them apparently. But as more people travel, as more companies turn to them and they make more partnerships with companies, I think the margins is going to go right back to where it was. Because a company like this, from what you've seen so far, they fight through the hard times and they make things happen. And not a lot of companies can say that. At least not the bad ones. Companies like this that are good to decent, you have a stronger possibility of upside than a lot of other companies. The price to free cash flow, as you can see, the free cash flow has been positive for a very long time. Going all the way back to 2010, this company has been producing positive free cash flow, and the growth might not be linear, but it's there. It's going up over time, and that's what you like to see. Even in the recovery from COVID, this company is producing stronger free cash flows than they've ever produced before. And that's a huge, 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 huge plus in my eyes. Like, you cannot beat that. That's something that I want to see in a company. Like, they've been tested and they're coming out to the light at the end of the tunnel. That's what we want to see. Constant growth over time. And a company like this that's showing you that growth, you can't overlook it. Look at the returns on their investments and their capital and their equity. Look at how great that is over time. It's growing and growing, almost green every year. But anyway, all in all, it looks poised and stable. Like I said, my only concern is that they're doing business with Greece, who recently went bankrupt. We want them to pay their bills. But thanks for watching. Like, subscribe, follow, comment. Let me know what you think in comments, because I really want to know what you guys think about Euronet. And let me know if you want me to review a particular stock. Like, I'll do that for you. I got you.